Hey guys, welcome back to the channel here. Today we have a special guest and I'm going to be talking about everything to do with the mortgage side of it. And we'll cover a lot to do with first-time home buyers, sellers, and some investors. But before we get into it, I just wanted to say why I chose Chris to do this mortgaging here today, because Chris typically works with all my clients. Some of you have already seen him before and you've already worked with us before. But the reason I wanted to do this is because of the really detailed information and how we always work and how Chris works with every client. A lot of times I'll make sure everybody goes through him first before we get to move forward with any client per se. And we're going to go into details about that as well. So for you guys, just sit back, watch all this. You'll have a lot of questions with this, and you can just write a comment down below, and we'll be able to get back to you on a lot of things here. So, Chris, just a quick intro here. Tell me, what brokerage are you from?
I'm with Sherwood Mortgage Group.
Yeah.
We have a franchise under the umbrella of Mortgage Architects.
Yeah.
So I've been with them for the last 15 years, but overall I've been in the industry for 20.
I'm going to ask you questions from the perspective of the people watching, buyers. I'll try and make sure I ask all the questions that a lot of them might have. Yeah. A lot of what I've heard is, or what I hear, particularly when the first-time home buyer talks to me, they ask me, okay, so what's the first thing I should do? Should I just go straight to a bank? Should I talk to a mortgage broker like yourself? What's better? What's the benefit of dealing with you as opposed to a bank? And they have other myths, but I want to know from your perspective, what do you think?
Well, I think it's one, what are you looking for? Are you looking for value? And you want someone to hold your hand throughout the process? Or do you just want to go to the bank and, let the bank deal with you, get you into that pre-approval and say, go buy that property, come back when we're done? Whereas from myself and my team, what we do is we coach you, we educate you, we hold your hand along the way.
Yeah.
We time all of the things that needs to happen so that the borrower or the buyer understands and knows is comfortable with being able to know what the next steps are.
Yeah.
So it eliminates people not being able to sleep at night, not being able to have their questions answered after 5 o'clock because they can't get in touch with whoever they're working with.
Yeah.
So these are all important pieces that we kind of combine to provide that level of service. But one of the misconceptions that a lot of first-time home buyers have is, do I have to put down 20% or not?
Oh, I know. Yeah.
Right.
Yeah.
A lot of them think too, like if I'm making $100,000, I can buy something for 800, and you can't. So it's a matter of where do you fit? Like, because when you're putting down less than 20% down, there's rules around it, which we can get into.
Yeah.
When you're putting 20% down, then your borrowing power increases because now we're stretching out that amortization, right, to 30 years.
Yeah.
But the good news is now for first-time home buyers is we can still qualify you at a 30-year amortization as of the new rules that have taken effect.
15th, yeah.
Right?
Yeah. So when a first-time home buyer is coming into the market today and they're trying to gauge, should I get a fixed mortgage or should I get a variable mortgage because the interest rates have gone down, right? So what would you advise a first-time home buyer? Should they just get it for, let's say, 3 years and lock it in fixed for those 3 years and see what's going to happen in that time? Or should you get into a variable today and in the hopes of, because it talks about the interest rates dropping again next year as well. Yeah. Or should you take the risk of a variable? And we've seen what the other guys have done before, and now they're kind of, when it went all the way up to the 6-7%, and people were really stuck at that point. What would you advise a first-time home buyer coming into the market today?
Well, typically when we get the introduction from you, your team, I'll jump on a 30-minute call with that client.
Yes.
Right? Yeah. Once I get on that call, I'll have a better idea of what their risk tolerance looks like. Yeah. So if you're somebody that, wants to just know what your payments are going to be and you don't want them to fluctuate, then yes, we would go on a fixed rate. But I would still have the conversation with you to say, here's what the variable rate looks like.
Yeah.
Here's my thought process around it. Here's where I see you on this variable rate and all the things that can happen along the way. Example, rates will start to come down. As they come down, here's what your monthly payments are going to, your monthly payments technically stay the same, okay? But as the interest rates come down, we know that you're going to get closer to the fixed rate mark. And like I said earlier, in the event that the rates come down, you can always lock into a fixed rate, right? So the biggest component for that first-time home buyer is, do they have the risk tolerance to be able to go through the process of a variable rate? Are they willing to ride the wave? Because it will go up and down.
Yeah.
Right.
Or how do you equate your ability to deal with the risk of it going up and down? Is it more how much you have saved? Is it income? Is it like how would you gauge that?
For the borrower?
Yeah.
Through that conversation within the 30 minutes,
Yeah.
the questions that I ask along the way will give me a better feel of where their headspace is at. So if they're comfortable with saying, yes, you know what, I'm okay with this $300 extra a month payment, in hopes that this happens for the next 6 months or until the next rate announcement happens next month, whatever the time is around it, then at least we can map that out for them and say, well, here's what it looks like now.
Yeah.
And then in the event that the rates drop, like I said, you can lock it in.
Yeah.
But the risk tolerance for a first-time home buyer is really to say, well, the more important piece is, can they qualify for that variable rate? Because the variable rate qualification is higher than the fixed rate.
That's right.
So in today's market, most people are going on a 3-year fixed because it's easier to qualify because the rate is lower. The variable rate, with it coming down now, just with the last announcement, is the spread between a fixed and a variable is very close to each other. Mm-hmm. So now it's making it a little bit easier for people to qualify for a variable.
Yeah.
So when I map out their portfolio, if I think that they have the risk tolerance based on my first conversation with them to take on a variable rate, I'll give them the option for both.
Yeah.
And then I'll break down the payment for both.
Yeah.
So that way they know the difference of, okay, here's what the rate is today. My payment is going to be higher.
Yeah.
As the rate changes along the way, then your payments will be adjusted as well. Right?
No, I like that.
Mind you, that's going to happen in both ways, whether it goes down or whether it goes up.
Yeah.
But over that 3-year term or that 5-year term, overall in the last 18, 20 years, what we've been doing, variable will always win.
That's right. Okay.
Right? So it'll average out to be less than the fixed rate. But to that borrower that wants to know what their fixed payments look like and they don't want anything to change, at this stage where we are today is advantageous for someone to try to take on the variable rate and then lock it in.
I see.
Right? But if the bond yields come down and the fixed rates are coming down as close to what the variable rates is, then it's a no-brainer at that point.
Yeah. And I like that you mentioned, I love this a lot because when you're talking about the real estate portfolio, a lot of times what I usually do when let's say a client, a potential buyer, first-time home buyer, or you're thinking to upside from selling your home or something like this, a lot of times what we do a buyer consultation. And in that buyer consultation, I think it's very important where we break down the whole process for a buyer and we kind of explain to you what's going to happen before I even bring them to you. Because a lot of times what I prefer is for the client to come to Chris, then Chris has the whole spectrum and goes through everything and you kind of make sure everything is good on that front before they come back to me and we go and start looking at properties. But what I wanted to ask you on this is, what are some of the things that a buyer should get ready to come and talk to yourself? Like, is there anything particular you prefer for them to have ready when they're coming to have this conversation with you?
Yeah, there's really just one thing that I need the client to know. Okay? Because when we walk you through this process, I'm not asking you for all of your income documentation, where your down payment is. I'm not looking to see all of that at the initial stage. I just want to know if there's a way that I can help. And if I can help you, then I'll walk you on to the next step, which I'll give you a list of items to prepare to send me all of the documents that I require. But in terms of getting the one thing that I want the client to be able to tell me is, Chris, I have a car payment of $500. I've got a student loan of $600. And I got a credit card limit of $10,000 with a balance of $3,000. And I have another credit card with a limit of $5,000 and a balance of $1,000 on it. As long as I know you know what your credit situation is and what your limits and balances are, I can do the rest.
And you're not, correct me if I'm wrong, you don't run a credit check just yet up until we've obviously had an offer accepted.
And that's the whole purpose as to why the one thing I want the client to tell me is what do they have in terms of debt.
So they have to be obviously honest at that point. There's some that might not know there's some things in their credit that maybe, I had a client who had like a $50 collection debt in their credit and they had no idea, which was completely affecting them.
Yeah.
And where it almost affected them in terms of when they're going to get in their mortgage and all this, because it came up after the mortgage broker now kind of put in the did they run down on the credit check?
Yeah. Well, we don't, like I said, I mean, when we do the full scope of the portfolio review, we're not, I mean, there's no need to pull credit at that point. But if there's something that the client wants to know and say, you know what, I had this collections and, I'm not sure if it came off my bureau as yet, like, can we run it? I can still run it. It's no problem. But the one expectation that I have is that you can tell me what all your debts are, is my point. Once I know all the debts, then we can fine tune it. I'll ask, do you pay your bills on time? Do you keep high balances? Because now what Equifax is doing is if you've got that $10,000 limit and you're 80% to the limit every month, that's one of the variables now that's affecting your credit score. So it's not just that you're making your minimum payment on time. That's fine. That gives you a good credit score. But if the balances are too high, that's going to negatively affect your score as well.
You mentioned Equifax. Is that the major one that you guys use, or do you use other like credit union or that type of?
No, there's just Equifax and TransUnion.
TransUnion,
So those are the two. We are more privy to the Equifax side because it gives us a lot more in-depth detail. Different than a consumer report, because people will come to me and say, oh yeah, I pulled a report, it was free, I got it from my bank, or I got it online. But that's a consumer report. That's just telling you if your credit score is excellent, good, fair, or poor. Right? And then it gives you a score.
As a first-time home, I think this is one of the myths that a lot of first-time home buyers might have is there a particular credit score that you need to be in and around to actually be able to qualify?
Yeah, so the minimum credit score should be at least 680. There are lenders that'll go up to 600. But if you've got two parties that are buying, one will have a 680 score, the other technically should also have it. But if the main borrower, that's the higher income earner, has a 680 credit score, then if the second borrower is 600 score, it's still doable. We can still get into the A side of the lending criteria because the main applicant has the higher credit score. But if the main applicant, meaning the higher income earner, has a lower credit score and the lower income earner has the higher credit score, then it wouldn't work.
No, I hear. And one thing I have to say as well, because this is why it's so important to, even if you're coming to a real estate agent like myself first and you're thinking, I don't know if I want to buy right now, I don't know if I want to buy in 6 months or in 3 months. This is why it's really important to have this conversation with Chris initially. So let's say you get somebody approved for an $800,000 mortgage and the $800,000 purchase. And they come to me, and at this point is where we're able to now go out and look at properties, and we're very clear on the maximum price point that you want to be looking at. Because a lot of times what has happened is people will do a soft mortgage search online, which is okay. And from there, online, you might see that let's say you're approved for around 800,000. Then you come to us and Chris does everything and Chris finds out that you actually approved for only 750. But now you really spent a lot of time out there looking at properties, and now you really sold yourself in buying a property for around 800,000. And then that's when you submit the offer. Yes, to be financially conditioned. Then you bring that offer and we take it to Chris, and Chris says like, oh, this guy's not approved for 800, and they're only approved for maximum 750, and you might have to come up with that balance. So how we avoid this is by having this initial meeting with Chris here, and once Chris has done everything as he's just explained here, we are able to now move forward and do the searching as well. Thank you for taking the time to listen to all of it, Chris and myself here. And Chris, thank you for coming in.
Thank you for having me. I appreciate it.
So that's it, guys. See you in the next one.
Thank you.
Bye.